Okay, guys, so one of the most common requests that I get from you is to go over the data you need to collect when you're live testing, you're back testing, live trading, and all of that. I think it's no secret that without data, without examples, without numbers, you are literally blind in this game. And that's exactly where you don't want to be, because during every single time you draw down, you will question yourself, you will question your strategy. It will be really hard to follow through during those rough periods in the markets, because they do come. No matter how good you are, losing streaks are just part of the game, and there's nothing you can do about that. But when you have data, then you know exactly what you are looking for, you know your numbers, you know how your perfect trade looks like, you know exactly when it forms, you know exactly where to look for it. That's when you enter the field of actual trading, actual improvement. And that's exactly how you don't fall into those same traps that 90% of traders do. So in this video, let me quickly give you all the most important aspects that you want to have in your journal, have in your Excel sheet, whatever you are using to collect data. We'll talk about this most recent move right here, the 15-minute buy model and the OT that happened. We were playing towards the Asian region highs to take out this low resistance buy side liquidity, as well as the original consolidation, and our last target being that previous day's highs at 1.07338. So for the example purposes, we will be talking about this long right here. Let's put it at OT price. We are covering this low right here, and let's say our last target is at previous day's highs. Now let me quickly list all the most important aspects that we'll be noting about this trade. I understand that a lot of you guys are trading different techniques. You are trading different strategies, looking for different things. Some of you are thinking partial profits. Some of you have fixed targets like 2R, 3R, 4R, and so on. Same thing what comes to the management. Some of you are more active. Some of you like to walk away when you place the trade and just place alerts and not even look at the charts. So everything that you see here, you can customize based on your strategy, based on your approach, based on what you are looking for in the market. But what's listed here is the core. It's the foundation of what you want to track, what you want to collect. All right, so let's simply fill all of that. All right, so symbol. So obviously it's euro dollar. Date. It was 30th of April. Direction, long entry time frame. As you are using this as an example, as again, I don't know what you guys are actually trading, what time frames you're trading, what entry patterns you're trading. So in this case, obviously, I'm showing something that, for example, an OT trader, someone who takes mainly OT type of plays, are looking for. So in this case, it would be 15-minute time frame, OT entry, then kill zone. It was long on kill zone. Entry time. You look at the entry, you can see it's 4 a.m. Exit time. So this is when you are taking partials, you want to list all of them. When exactly you took those partials. Let's assume we had fixed targets right at the previous day's highs. So that would be 5:30. Duration. So we want to track the duration to know what's the average, how long usually our trades take to play out. 1 hour, 13 minutes, 5.6. Then draw down on entry. That's super important. What this basically is, after we enter on the winning trades, we want to track how much price pushes into drawdown before it starts going towards our target. So in this case, what we do, we take our entry price right here and we drag it lower 5.7 pips. So you can see that after our entry right here, price lent 5.7 pips before turning around and starting to climb towards our target. So this is what we type right here, drawdown on entry. Now, why is that so important? Mainly because If we filter only our winning trades and we can see that most of our trades, let's say, goes only 2 or 3 pips into the drawdown before it turns around and starts going towards our entries, and let's say our average stop loss size is around 9-10 pips, that's a clear sign that we just simply want to use a tighter stop loss, which will allow us to squeeze a better risk to reward. Now, on the opposite scenario, again, if we focus only on our winning trades, and we can see that our average stop loss placement is again 9 to 10 pips, but our drawdown on entry on most of the trades is, for example, 6-7 pips. That's a clear sign that we are entering too early. So this is when we want to use this data to our advantage and really dig into our trades and see if maybe we are missing something. Maybe price is gravitating to, let's say, a certain PBA, a certain level. So again, we are not talking about entry patterns in this video because I know you guys are using different entry techniques. We're just a big reminder that you want to track your drawdown or entries because that will let you know the two things that I mentioned. If you are using too wide of a stop loss or if you are entering most of your trades early. Now, moving on, let's delete all these things right here. We have a take profit size. So in this case, we can see that it was 35 pips. Now, why do we track that? When we have enough trades, let's say 60, 70, ideally 100 or even 200, the more the better. From our winners, we will be able to extract the average move that price gives before, let's say, it gives a deeper pullback or even turns around in some cases and stops you out for break even. So that point, let's say our average is like 25 pips. We dig into our data and we see that as soon as price hits 25 pips, in most cases, it either goes for a deep pullback or it just completely collapses on you. That will be your sign that whenever price moves 25 pips in profit, you want to take partials. So that's again when data can be massively used to your advantage. Now, what comes to how many pips price moved after the last take profit, on those real runners, like in this case, we can see that all of the targets here have been hit into this 13th point right here. It will simply measure from the last target how many pips price put it higher, and in this case it's only 1.7. The main reason why we want to collect and track that number to simply know if you are leaving some pips on the table. It doesn't mean that we will have to change anything regarding our plan or stuff like that, because obviously we don't want to squeeze take profits on the price action, because every time, in most cases, the liquidity pools and levels that we target will vary, but again, we still want to keep track of this number. Now, if we move to the 14th point, which is reason for exit, here you want to simply type take profit hit or stop loss hit, or even, let's say, risk removal 1 or risk removal 2. This will vary for everyone because I know you guys are trading different strategies, etc. So simply here you name the reason why you exited the trade. You can also add emotional manual close and stuff like that. In this case, it was take profit hit. What comes to the daily time frame? It's simply listed. It was PO3 day, pullback day, or neutral. So in this case, I know that price was in a pullback state. We were pushing higher, but it was still a pullback, even though we had our clear levels, our clear targets, etc. But with this trade, we were moving against the main direction. So in this case, we simply type pullback. Now we move further. What comes to the hourly and 4-hour time frame? Again, run, pullback, or neutral. Here we obviously put it as run. Lastly, win, loss, or break even. In this case, it was a win. And then we have all these simple points to fill out. So the percentage win that you took on this trade. This will be relevant if you are using these points for your live trading, even for backtesting, because I obviously don't know if you're using partials or fixed targets and stuff like that. So in this case, just for example purposes, let's put for our win. Let's say we are risking 1%, so that would be 4% win. News that day. So in this one, you want to simply highlight if we had any high impact news. So on Tuesday, we had 8:30 a.m. was the employment cost index. So we simply want to type that to basically know how was the calendar looking like. Because again, when you have big enough sample and you, for example, play around with your losses and you see that, let's say, most of your losses come on 8:30 a.m. who has the unemployment claims, that's the most obvious sign that you don't want to trade that day. Simple as that. So we simply want to keep track of this one. And lastly, that's where you want to put all your thoughts, mistakes, takeaways, everything's that on your mind basically regarding that particular scenario, that particular trade. So in this case, let's put it as bread and butter trade, nothing to note. And here you go, guys. These 20 points is the foundation that you want to use. Again, I don't know what strategy you trade, so you can play with this. You can add some, delete some, change some, and stuff like that. And then again, when you have a big enough sample size, the more trades, the better. You can play with it. You can see that, for example, most of your wins are coming on Tuesdays, or for example, most of your losses coming on Wednesdays, or let's say most of your losses are coming on Monday morning. So obviously, that's how you would make adjustments to your trading plan. So in your Excel or whatever platform you are using, you can see that on Mondays, London Kilozone, your win rate is around 8%. Why would you even trade that? That's a clear sign that you want to cross it out from your strategy, from your plan, and not even waste your time, your mental capital, and obviously your money. So from these 20 points alone, there are a million of things that you can extract what comes to your strategy. Again, I want to highlight the fact that you want to have enough trades that are focused on your strategy, assuming that you already have a plan, already have a strategy that you follow, which is not some discretionary thing with many loose puzzle pieces around. When you collect a big enough sample size, again, the more the better. These simple 20 points will make you a better trader. Which kill zone gives you the best profits? What's the average duration of your trades? What's the average stop loss size of your perfect trades? On your winning trades, how the price goes into drawdown before it turns around? What's the impact on the win rate? What comes to the 50th and 60th point? Regarding the daily time frame and hourly time frame alignment. Also, you will want to have a separate tab when it comes to your missed trades. That's obviously something we call live testing, so you will want to use these same 20 points and log all the trades that fully fit your plan and are A+ setups. So that's all I wanted to color in this one. Again, feel free to customize these 20 points based on your strategy, based on your management and entry techniques. But this is the rough structure I personally use almost daily when it comes to my trading, and I really hope that it will help somebody out.